They call it Dr. Copper. Not because it has a degree, but because it diagnoses the health of the entire global economy. Copper is everywhere. It's in the wiring that brings electricity into your home, in the circuits of your smartphone, in the plumbing that carries water, and in the motors that power cars, buses, and trains. It is the metal that quite literally keeps the modern world running. Because it is so deeply connected to nearly every industrial and consumer product, copper demand rises and falls with the broader economy. When the global economy is expanding, demand for copper grows. When the economy contracts, copper consumption slows. This is why copper earned its nickname Dr. Copper. Traders and economists look at copper prices the way a doctor looks at a patient's vital signs. A strong rising copper price usually means the economic patient is healthy. A weak or falling copper price suggests that something is wrong. Let's think about some examples. During global construction booms, copper demand surges because wiring, pipes, and infrastructure all rely on it. When factories ramp up production of electronics or vehicles, copper consumption spikes. When governments invest in infrastructure like railways, bridges, and power grids, copper usage climbs even higher. On the flip side, when copper prices drop sharply, it has often been a warning sign of recessions. In 2008, copper collapsed ahead of the financial crisis. In 2015, copper prices slumped as global growth slowed and China pulled back on infrastructure spending. This unique sensitivity is why financial markets trust copper as a predictor. It's not just a commodity, it's an economic barometer. What copper prices are saying right now at this moment, copper is priced at $4.50 per pound. That number might not shock you at first glance, but in the context of history and global demand, it's very significant. In 2021, during a post-pandemic surge in construction and manufacturing, copper hit nearly $4.90. It was one of the highest prices in history. Since then, it has cooled, but the recent upward move back toward $4.50 is more than just a bounce. It's a signal. Why is copper climbing again despite high interest rates, global debt, and geopolitical uncertainty? The answer lies in demand from industry. The China factor. China consumes over 50% of the world's copper. Every major move in copper prices begins with China. When Beijing launches infrastructure projects, builds new cities, or invests in electric vehicles, copper demand jumps. Right now, China is actively stimulating its economy. With real estate markets under stress, the government is pivoting toward renewable energy, EVs, and large-scale infrastructure. All of these require enormous amounts of copper. The global energy transition, it's not just China. The US and Europe are also pushing renewable energy programs. Solar panels, wind turbines, and electric grids consume staggering amounts of copper. An offshore wind turbine can use up to 8 tons of copper. Solar farms require miles of copper wiring. And then there are electric vehicles. A standard gasoline car uses about 50 pounds of copper. An EV uses between 180 and 200 pounds. Multiply that by millions of vehicles produced annually, and you begin to understand the scale of demand. The $6 outlook, when you combine these forces, analysts believe copper could break $6 per pound. Once that psychological level is crossed, momentum could accelerate. Hedge funds, commodity traders, and institutional investors will pile in. So the big question isn't just whether copper rises. It's whether copper's rise signals the beginning of a much larger cycle of global industrial growth. Copper as an economic signal. Copper's price movements tell us more than just supply and demand. They reveal the underlying health of economies. When copper is strong, here's what it signals. Factories are operating at high capacity. Housing and construction are expanding. Consumers are buying electronics, cars, and appliances. Governments are investing heavily in infrastructure. On the other hand, weak copper prices usually mean manufacturing is slowing down. Construction is facing delays or cutbacks. Demand for durable goods is declining. Economies may be heading toward a downturn. This is why economists often say, if you want to know where the economy is heading, look at copper. Right now, copper isn't just rising because of a short-term recovery. It's rising because of structural demand, long-term trends that will keep consumption high for decades. Renewable energy. The world is electrifying at a record pace. Renewable energy is central to this shift. Every wind turbine, every solar panel, every electric grid expansion requires copper. Without it, the transition to green energy is impossible. Electric vehicles, EVs, are another massive source of demand. Global automakers are investing billions in EV production. Governments are offering subsidies and setting deadlines to phase out gasoline engines. That means copper demand from EVs will continue to grow exponentially. Urbanization and infrastructure. In emerging markets, millions of people are moving into cities. That requires housing, transportation, and electricity, all copper-intensive industries. So copper today isn't just telling us that factories are running. It's telling us that the next decade of growth is being built on copper. Investing in copper, the smart and the difficult. Now let's talk about the most important part for you as an investor. How do you actually invest in copper? The problem with physical copper, unlike gold or silver, copper is not easy to hold physically. If you wanted to buy $100,000 worth of gold, you could store it in a small safe. Try the same with copper, and you'll need a warehouse. Why? Bulk. Copper is far less valuable per ounce, so you need huge amounts to equal the value of gold or silver. Storage costs. Storing copper is expensive and space-consuming. Transportation costs. Moving copper is not practical for individual investors. Oxidation. Over time, copper tarnishes and corrodes if not stored carefully. This is why very few people actually buy physical copper as an investment. But here's the twist. If it were possible to buy, store, and transport copper efficiently, it would be one of the smartest investments around. Because you'd own the very metal that the entire global economy depends on. Smarter ways to invest. Since holding copper physically isn't realistic, investors turn to financial products. Copper futures contracts. These are agreements to buy or sell copper at a future date for a set price. Futures are used by professional traders and hedge funds. They provide direct exposure but require expertise and carry high risk. ETFs, exchange-traded funds. Retail investors can buy ETFs that track copper prices or copper mining stocks. Examples include CPER, which follows copper futures, and COPS, which invests in copper mining companies. ETFs are simple, liquid, and accessible. Copper mining stocks, companies like Freeport, McMoran, Southern Copper, and BHP produce millions of tons of copper annually. Their stock prices rise when copper prices rise, often with leverage. Mining stocks can deliver big gains, but also come with risks like labor strikes, regulatory challenges, and geopolitical instability. Diversified commodity funds. Some funds include copper, along with other metals like aluminum, nickel, and zinc. These give exposure to industrial metals broadly. The bottom line, if you're bullish on copper, ETFs and mining stocks are the easiest ways to invest. Futures are powerful but risky for beginners. And physical copper, while theoretically attractive, is impractical. Why copper could be the next big play? So why is copper such a compelling opportunity right now? Because the 21st century is being built on it. The last century was defined by oil. Oil-powered cars, planes, factories, and entire nations. Whoever controlled oil controlled the global economy. But in this century, as the world shifts to electricity, renewable energy, and digital infrastructure, copper is becoming the new oil. Electric grids, EV charging stations, 5G networks, and smart cities all run on copper. Without it, the future simply cannot function. Supply challenges. The problem is supply. New copper mines take over a decade to develop. Environmental regulations are strict. Many existing mines are aging and producing less. And geopolitical tensions often disrupt supply chains. That means even as demand soars, supply cannot keep up. This imbalance almost guarantees higher prices over the long run. So when you hear predictions of copper reaching $6,700 or even 10 per pound, they are not unrealistic. They are the natural result of demand far outpacing supply. Bang. The role of China and global industry, we must return to China, because it is the single largest driver of copper prices. China alone consumes more than half of the world's copper. No other country even comes close. Its economy determines whether copper rallies or crashes. When China launches massive infrastructure programs, new cities, high-speed rail, renewable energy farms, copper demand spikes. When China slows down, copper falls. At this moment, China is doubling down on renewable energy, EV production, and electrification. This means demand will only grow. But it's not just China. The US Inflation Reduction Act is funneling billions into clean energy projects. Europe is investing in offshore wind and solar. Emerging economies in Africa, Latin America, and Southeast Asia are urbanizing rapidly. Every one of these trends is copper-intensive. This is why copper is not just a commodity, it is the foundation of global growth. The road ahead, so where are we heading? At $4.50 per pound, copper is already reflecting strong industrial demand. But this is likely just the beginning. Analysts expect copper to break $6 and potentially much higher as the energy transition accelerates. So what does this mean for you? It means ignoring copper could be one of the costliest mistakes an investor can make in the coming decade. No, physical copper isn't practical. Storage, transport, and corrosion make it nearly impossible. But ETFs, futures, and mining stocks give you powerful ways to ride this rally. Dr. Copper is speaking. It's diagnosing the global economy. It's pointing to a future of rising demand, limited supply, and higher prices. The only question left is, are you listening? If this helped you see things differently, drop a comment and O will answer your questions. Subscribe for more honest finance content. And remember, smart money doesn't sit. It moves.